Hi traders! I'm Valerie, your performance coach and guide through the trading psychology, and this video is about a crucial topic: you as a trader. Who am I as a trader? What is my personality? What is my style? Who am I not? These are the first questions you should start with when jumping into trading. Some traders are more predatory, some are more cautious. Observe what drives you, what irritates you, what is pleasant and unpleasant for you before you choose a realm of trading. Whether you are a long-term trader, short-term trader, trading with gold or crypto, you are influenceable by many factors. So you need to work especially on your mindset, so as not to succumb to fluctuations, press, and so on. The sooner you figure out who you are as a trader and play to your strengths, the sooner you can work out how to remove your weaknesses. But there's more than that: your self-confidence. If you have a great mindset but no confidence for trading, you probably won't succeed. The same goes if you're overconfident. What is self-confidence? It's a belief in your abilities, qualities, and judgments. How big your confidence is refers to how you approach challenges, take risks, and handle situations. How you love yourself and allow yourself to win, earn, deserve, feel happy. So where is your self-belief on the scale from 1 to 10, and where do you wish it to be? In answering this, you probably know that you are a trader with too low self-confidence to succeed, or a trader with too high self-confidence to succeed, or a trader with just enough self-confidence to succeed. Let's look at the first type: low confidence. Our thoughts are so powerful. They can either hold us back or help us make a revolution. Most beginners in trading face negative self-talk and questions like, can I start with trading even if I don't have a degree in that field? It's too risky. I can lose a fortune. I'll be a loser if I don't succeed. People will laugh at me. My girlfriend will kill me if I lose money. My friend didn't succeed in trading and he's smart, and so on and so on. Some of these are so-called limited beliefs. You believe in something and it's limiting you. Look, nobody would have succeeded if they hadn't tried. Probably when you were 5, you didn't doubt whether you were good enough to be in school. You just went to school. Trading is like a school. You need to learn a lot, gain experience, and learn from it every day. A trading veteran, John Moulton, so-called Rambo, says the biggest lesson he's learned in 40 years of trading is working on your self-belief. It's a balancing act between having an ego as opposed to having too big of an ego. Know what your strengths and weaknesses are. It's a game of inner mental exploration. So, what can you do to boost your confidence to start trading? First, your successes. Remind yourself of your successes in the past. Maybe you finished school, got a job, earned money, had a good idea, and accomplished something that was important for you. Make a list of your successes and read it often. Even the small things count. Appreciate yourself for each new success. Second thing is, consider the statistics. If you have a trading plan that you backtested and made a statistic out of it, write the statistic on a paper and keep it next to your monitor to always see that you are profitable when trading your plan. Useful self-talk. Try not to create and not to deepen limited beliefs, and make some that are more useful, like, I'm learning to trade step by step and I want to improve myself. If I learn a lot, I can be very successful. I'm working on myself and it will pay off. I can start from the scratch, because why not? I can give it a try and see what will happen. Focus on the process. Do it for the training and your development itself rather than for the results. Of course, it's good to set your goals, but focus primarily on the process and what it can bring you. The difference might be: A, I want to win 15%. B, I want to have a new experience today, train my ability to stay calm, to analyze, react to changes, and so on. Second type is a trader with too high self-confidence. So you probably think that there's nothing to hold you back from your wins, that you were born for trading, for success. You feel so powerful. But wait, what exactly convinces you it's true? Either you are naive and too optimistic, or you don't know the market, or you don't have enough information, so you think that nothing can surprise you. It can, believe me. Your self-talk might be like, I'm making a killing today. Nothing can stop me. I can't believe I haven't made a big win yet. Well, I believe it, because your ego and self-esteem are so boosted that you don't have sound judgment. So, let's go back to earth. You have to admit you don't know a lot yet and need to work on yourself. I have a few tips for you. First, analyze your behavior and its consequences. Second, prepare better, do research, make a market analysis and plan. 3. Cultivate respect for the market and its rules. The market itself is the best teacher. You are the student. No matter how self-confident you are or what your personality is, write a journal. It's a great tool for self-reflection and learning for all traders, especially beginners. Note, for example, what didn't work with your strategy, attitude, and so on. What worked, what your preparation was, what helped you to stay calm, focus, and so on. How did you feel during trading? About your win, about your loss. Try to be as much specific as you can, like, I did this and it led to this. Don't just write, I felt good, I felt bad. Name the emotions, your mindset, the consequences. Like, I felt annoyed and disappointed about myself when I lost. Because I was expecting a win. I dedicated a lot of time into trading. Ask yourself questions, starting with why and how. Why is this happening to me repeatedly? How can I change my process and my reactions to what is happening with the trades? Let's have a look at a self-confidence from another point of view, as a part of the process. How it rises and falls with the circumstances. How it changes based on your losses or wins. Scenario 1. Losses, lower self-esteem. You are facing several losses in a row, or the losses are much more frequent than the wins. You want to give up. You will feel like the market is so mean to you, that somebody on the other side is making fun of you. I understand. But don't worry. All traders experience this at the beginning. Even though you feel down, try this. Analysis and risk management. Make a plan based on the analysis, do risk management, and follow your strategy. Make a complete picture of your trading performance. Look at it from the above. Discipline. There will always be things that can divert you from your strategy. Analyze them. What are the strongest reasons why you break your rules and strategy? Dealing with emotions. Oh, emotions. They can play tricks on us. It seems we're prepared, in a good state of mind, but something happens and we ride the roller coaster of emotions with no control of it. Don't be prepared just for trading itself, but also for the emotions that come with it. Develop strong self-control. We'll talk about emotions in the next video. Believe it will turn for the better. This doesn't mean that one day you're gonna win everything, but you'll be more experienced, more prepared, and therefore win more. Statistically, there is a probability that you get closer to profit with each stop as long as you keep following the same rules that you set and that makes sense. Scenario 2. Wins, higher self-esteem. For sure, this is natural. You manage to gain a big profit or you win more often. So now you think it's gonna be like this most of the time. Congratulations, and please don't go crazy. Celebrate your success and analyze it. Don't forget to write it in your journal. But get prepared for facing the losses too, because naturally they will come. Whether you're now in scenario 1 or 2, you need to develop a stoic calm, ability to withstand the turbulence. A stoic attitude is very useful for life in general. In one of the next videos, I'll tell you how to do that. Changes in your behavior. So let's say you're starting making notes. You see your first trade made sense. You had a proper risk. Everything seemed good. Your second trade looks amazing. But when you go back to your notes, you might realize the second trade doesn't make sense at all. Why such misinterpretation? The moment you take a trade, it looks really good. You made money. When you go back to trade in a couple of hours or days, you're like, what did I do? As long as you have a distance from it, you realize the person who's sitting in front of the screen when there's real money in the game is completely different from the person you are when the pressure and emotions aren't there. So ask yourself questions. What is the gap between those two? How do I make myself from this point to this point and understand what and why is it happening? Trading mantra. Making a trading mantra helps you to tune in the right mood, lifts you up when you're down, puts you on the ground when you're flying too high. What could be your trading mantra? Learn from the best, adopt the greatest mindset, and move forward. Happy trading!